Welcome to a special edition of Elements in Focus. Today we're going to talk about some special credits for taxes that we do not want you to miss prior to year end. It's 2025 and there's some credits that are vitally important that could end this year. I've got Daren Hardesty, our certified financial planner, with me in the Anderson office. Daren is going to lead us through that conversation, but before we get there, Daren, how are you doing this morning?
I'm doing great, Aaron. The sun's shining. We just wrapped up our in-person thirdlies. I thought they went really well. It's great seeing all of our families. So it's just really exciting. This is something that we don't always do, but this is something as we get into the content of today's video, a lot of good stuff that we want to make sure that every one of our families hears, just in case they qualify.
Yeah. Thank you, Daren. Just wanted to quickly reiterate for those of you that may be tuning in for the first time, our Elements in Focus video series is where we break down our five critical element process, where we talk you through your life after work all the way through legacy planning. And part of our goal is to make sure that we're keeping you educated. And as things change, we want to make sure you're staying abreast. And so this time we're going to do a special edition on a tax credit that's going away through the One Big Beautiful Bill Act. That is a mouthful, but we want to make sure that if you have done anything with clean energy, to make sure that you're not missing out on this credit prior to year end. There's some beautiful tax planning that we can do around it. And part of our job at the Financial Enhancement Group is to be proactive and make sure that we're reaching out to you. And if things change in our tax code, like it did on July 4th with the One Big Beautiful Bill, that we're paying attention and making sure that we're reacting and being proactive on your behalf. So, Daren, I'm going to pass it back to you. Let's talk about what's changed on July 4th and some of the credits that are going away.
Yes, thanks, Aaron. Yeah, since I've been here at FEG, going back to January of 2020, just lots of different legislation has been passed for multiple reasons, and it's just keeping us on our toes all the time. We've had several different occasions over the last several years that, hey, this has now changed. This was a rule, and it's no longer a rule, or this wasn't a rule, and now it is a rule. And so, with this big, beautiful bill, um, as a team, we immediately started to make sure that we were researching and figuring out, okay, what are some things that are going to impact our families, and how are we going to make sure that we use that for their planning. The big, most popular things that we've talked about, I would say, is probably with the senior deduction for those that are 65 or older that can use an additional deduction potentially on their against or with their standard deduction to kind of offset some of the potential Social Security taxes. There's been an extension where our current marginal tax rates are now permanent, where we thought before that there was a good chance that they would be reverted back to where they were in 2017. So that's been the popular talk. But what I love about this job is that first off, we get to take care of great people. And we had a family come in recently, and just through our conversation, through their family update, just kind of talking about what's going on, what's new in life. In passing, our family mentioned that they were going to be adding in a significant amount of work that would make their house run more clean or have be more environmentally friendly. So things like adding solar panels, that was a big one. Geothermal heating it was being added in. So this was a major project that they were doing and that they were going to do no matter what. It was just something important to them. And when we heard that, I started to in the meeting. Just I told our family, I said, "Hey, let me take that. I'm going to get back to you because there may be something of that we can help you with." And so when we did some quick research within the One Big Beautiful Bill, we found out that from the Inflation Reduction Act that was passed in 2022, the Biden administration wanted to incentivize clean energy upgrades to houses, to businesses. It was a very big thing that they wanted to incentivize. Well, the One Big Beautiful Bill said, hey, that tax credit, this clean energy tax credit that was offered, it was supposed to last through 2034. The One Big Beautiful Bill said that is over at the end of 2025. It's going to be no longer available for people after 2025, which deadline. Okay, so December 31st, it's coming. So when we went through, essentially what we did, we made sure that the things that our family was actually going to be doing, we verified, will the construction be complete by the end of the year? How much money are you spending for this particular credit? It's called the Residential Clean Energy Credit. It provides a 30% non-refundable tax credit for any qualifying work that falls under this category. As long as it's filed properly, you get a 30% reduction or a 30% tax credit that gets added to your or included with your taxes. So, as planners, we estimated the amount, or he gave us the amount. We got the 30%. We used our tax planning software to kind of plug in all of the new information. And our family, at the end of the year, was without this credit, or this credit essentially was going to pay for $7,500 of their taxes, which meant that they were going to owe zero federal taxes using this credit. The problem is there's another $10,500 of that credit that he wasn't able to use this year. So what we found is that additional credit that he couldn't use this year would actually carry forward into next year or the year, or however many years, to cover federal taxes. So it's not like it went away. But for this family in particular, we said, how about we take that additional credit and we do a Roth conversion to maximize and use all of that credit against their federal taxes. And so in the end, we were able to do a $40,000 Roth conversion that was never in the plan before. That was never something that was important to them or something that was necessary, but we found an opportunity through this credit that we could do that $40,000 where he is going to pay 0% in federal taxes. Nothing changed before, but now we got 40 grand of IRA pre-tax money into a after-tax account that's going to grow tax-free for the remainder of their life, come out tax-free whenever they need a distribution. Their kids are going to get more tax-free money when they inherit whatever's remaining. So it's a very cool thing. You know, these opportunities come up from time to time, and because it helped this family so much, as planners, you know, when we talked about it, we said, hey, I wonder if any of our other families have done something like this. Because asking about, you know, have you upgraded your home through clean energy is not typically a question that we ask our families. It's not something that, you know, is always going to come up in conversation. So we want to make sure that if there's anybody out there that's listening, if they have done any of this type of work, doesn't matter how much or how little, if they've done any kind of work that they think, hey, this might qualify, make sure you reach out to your planner, get a hold of us, make sure that we're there to kind of add this into your tax planning estimates to see if there's any opportunities that we have for you. If there's anybody that's been thinking about doing something like this and wants to capitalize on getting this credit, we want to make sure that you know that, hey, now's the best time. If you are already thinking about doing something, start getting the right people involved so that that construction can be completed before the end of the year. So it's a great planning opportunity. It's not something that everybody's going to fall into, but it's one of those things where if we can pick up some change off the sidewalk, if we can really optimize something that you were already doing to make sure that your tax return is more efficient, and that we are using these good tax avoidance strategies for you, it's really important that you reach out so we can get that information to you and make sure that, hey, here's the rules, here's how we can lay it out for you and see if we can make it work.
Darren, the nerd in me, I just did a quick calculation while you were talking just to see the impact of, you know, that $40,000 Roth conversion.
Yeah.
If you kept that in the Roth account for a 20-year period of time at a 6% interest rate, that would grow to roughly $128,000. So it is a incre- incredible and significant, just to pay attention to the rules. I mean, that $40,000 is tax free forever. And if it grows at a 6% interest rate over the next 20 years, that 40,000 is now going to be worth 130. And so it's a $90,000 of essentially, well, $130,000 of tax-free money. It's just
Yes.
an awesome opportunity.
Yeah, and this goes back to, you know, just knowing the rules of the game. This has been on top of mind for me for a long time, and it's just something
Yeah.
that, you know, when you know the rules, you can strategize. When you don't know the rule, you're oblivious, and there's
Yeah.
nothing that, you know, you can do about that. And I feel like at FEG, we take it very seriously. We really want to know the ins and outs of all these rules that the IRS lays out for us, and paying attention to when things change. That, you know, since I've been here, Aaron, I mean, since you've been here, how many times have the rules changed where what worked the previous year is not going to work the next year? And this is just one of those examples that kind of got snuck in and it's
Yep.
not being really talked about. Neither side of the aisle has, in terms of the news or what you're hearing, this is not something that people are really fighting about or upset about. But it is something that we know a lot of our families, a lot of people out there, putting solar panels on your property to save on energy costs. It's a really good idea. It's expensive, but it's a great idea. Thinking outward, energy costs, we've already seen it. Energy costs for utilities are most likely going to increase as we move into this AI world where
Yep.
it demands more energy production. We're all going to feel that when we see our utility bills. So for this family, he saw the writing on the wall. This is something that's personally very important to him. But at the same time, he's saying, hey, I'm going to avoid a lot of that cost because I'm willing to invest in adding some of these things to my home. And so I love it. And I want to make sure that if this is something valuable to you, that your planners are able to help you optimize that in the best way possible. It's every situation is different. Every variable with each family is going to be different. But what we want to make sure we get out to our families is that, hey, if you didn't know this before, now you do. We don't have a lot of time before the end of the year. Aaron, let me walk through a few rules here to kind of get into the more of the
Sure.
specifics of how this works. So, so families, if you've stayed with us this long, just kind of stay with us here too as you kind of think through if this is something that you've done. So, you can claim again, this is a 30% credit against whatever you pay for qualifying expenses. So things that could qualify: solar panels, solar water heaters, uh, wind turbines of some kind, geothermal heating, battery storage. These are things that, a lot of people, if you're not familiar with this side of the world, like this is stuff that, is very common if you're really wanting to upgrade these things in your home.
Hey,
There
Darren,
is,
real quick.
yeah.
I was a personal benefactor. Last year, I changed all of my, old water heater to put in a tankless heater and energy
Hmm.
efficient system, and I got a $1,600 tax credit for taxes in 2024. And so, even things like upgrading, you said, like you changing out an old hot water heater and you're putting in more of a uh, tankless water heater and things that are more energy efficient. I was a product of that last year myself.
Absolutely. And even $1,600, there's it's, you can do so much with that if you know the right way to incorporate
Yeah,
it with your tax planning. One thing that's really great about this is that there's no cap for the credit, and so if you do 100 grand of work, you get a $30,000 tax credit,
that's
and
incredible.
it is. And what I really like, it is non-refundable. So for those who aren't familiar, there are refundable tax credits and non-refundable tax credits. Refundable means that if you don't use all the credit to offset your taxes owed, you get a that gets added to your tax refund, where you get that cash at the end of filing your tax return. For a non-refundable, if you don't use it, it goes away typically. In this case, it carries forward for as long as necessary. So
Can
if
you,
you
real quick, just discuss the difference between a credit and a deduction? Because they're hugely different.
Right. So a credit is something that comes after the fact. It's when you have taxes owed after all deductions have taken
Yeah,
place. So, typical deductions that you see, there's top line deductions if you're contributing to a 401k into the tax deferred side of the 401k. That automatically reduces your income. You don't ever pay tax on it. It's a top line deduction, so it reduces your income from the start. Then we have other deductions like the standard deduction, which most people use, which this year for people married filing jointly, it's $31,500. It's a large deduction after all of your income has been accounted for. So it reduces that taxable income. It's still tax favorable, but not as much as a top line deduction.
yeah.
After all those deductions have taken place and we look at how much tax is owed, that's when credits start to come in to reduce that amount of taxes owed.
Dollar
So
for dollar, right?
dollar for dollar, exactly.
Yeah.
So it just completely removes it. So there is no cap. So depending on how much this work is not cheap, I would say, for lack of a better term, it's
Yeah.
not putting solar panels in is not it's not something you can go out and spend $1,000 and get a lot of work done. It is going to be several $1,000s for a lot of this kind of work. This also just know that after the big beautiful bill, some of the rules in here, and this is a lot where you got to make sure that you file the right form. The form that you want to make sure is filed if you've done any of this work is I'm sorry, I'm blanking on the term, but it's a 50. It's a we'll figure it out. But this form needs to go with it. And I know Aaron's looking in here, and again, this is kind of last minute stuff that we're wanting to make sure we get out. So I apologize for not knowing that off the top of mind. Um,
5695.
5695. So that form 5695 definitely needs to be filed with your return if you've done this work. So when you talk to your CPA or tax preparer, make sure that they are aware of that. One thing too, that there's some tight rules here. That you cannot just pay for the work before the end of the year and qualify for the credit. It's very clear that the work has to be completed before December 31st for you to receive this credit. So we are 3 months before the end of the year at the time of this recording. That may or may not, if you've not started this process, you may or may not have time to get this done. But it's definitely worth exploring to see if it can, if it's something you've been thinking about. So again, when you reach out and you kind of say, hey, we've done something like that. I need to talk to Aaron. I need to talk to Daren. Just reach out, and we can, go through more of those in-depth details to make sure that we know, hey, you qualify or you don't, or this is something we can use or not. And so, again, we've had since July 4th. This is one of those things that kind of snuck in under the radar. It came to our attention through just a regular family update. And so we want to make sure that if it helps this family, there's a good chance out of our 1,200 plus households, it's a good chance somebody out there could also benefit from this.
Yeah. Thanks, Daren. As we kind of wrap up, we just want to stress the importance again of the uniqueness in the journey that everybody is on financially. And so, as Daren and I and our team discuss our 5 critical elements, a lot of times we talk in very general specifics, but when we get down to it, the importance of coming in and the importance of having conversations allows us to uncover things like helping someone be able to tax-free convert $40,000 of tax-deferred money to a Roth IRA that will grow tax-free. And so, as Daren said, we are very proactive and we pay attention to the strategies. That's what we're here for. In my time with FEG over the 11 years, I've seen probably 6 to 7 or 8 bills that have been written, changed, monkeyed with the tax code in different ways. And so things are constantly changing. Daren, I'll pass it back to you because you're going to say something.
Yeah, it's one of those. I've seen several times when we meet with families after the first of the year, and we see their tax return, and something will show up on their tax return where it's like, "What's this? We didn't know about this. You didn't tell us about this," and we lose the opportunity to do something. In this
Yes.
scenario, for this family, this carry forward of this non-refundable credit, we would have been able to use that in next year, but it wouldn't have been as efficient or as optimal as using it this year. And so we don't want to be in those situations if we can help it. We want to know if you're making a big financial decision, not something where it's just $1,000 here, $500 there. Those things matter, but if you know you're making you're buying something or you're upgrading something, or anything that applies where it's like this is a big financial decision for this family. It's a lot of money that they're going to be paying to upgrade their home. Let us know. I mean, I would say most times there's probably not going to be a whole lot that we can do. It just depends. But in this situation, it's one of those where it's like, I'm really glad we caught it. We're going to be able to optimize it in 2025, and we're not going to find out about it next year and be like, oh, we missed a chance. In this case, this is a perfect example of that.
Perfect. If you want more information or you want just a review of where you're at along your life after work, or even if you're looking for a different guide to make sure that your financial journey is going down the right path, FEG is here for you. Give us a call, 800-928 4001. You can request a complimentary next steps meeting at yourlifeafterwork.com. There's a contact us section. You can fill that in. One of the advisors on our team will give you a call, reach out, ask you a few questions to make sure that we have a good understanding of what you're wanting to accomplish in that next steps meeting. During that next steps meeting, it's a 90-minute meeting where we'll consult with you and we'll have a collaborative talk about your situation, your specific situation. We'll give you things to think about today, things to think about in the future, and if we decide to partner together, a written plan for what FEG will do for you and your family. Thank you so much for watching. We really appreciate the work we can do for our current families and absolutely appreciate any future families that we can take care of. Have a blessed day, and thank you so much again for watching.